Hello and welcome to BQ Prime. I'm Hiral Daria. Joining us on the show today is Rahul Shah, Senior VP, Advisory Leader, PCG, Broking and Distribution at Motilal Oswal. Welcome to the show, Rahul, and a very good morning.
Hi, good morning. Thank you
Rahul,
so much for inviting.
always a pleasure. Rahul, a lot of stock specific action is what we are seeing today, and it's mainly on the back of the numbers that have come in. Let's start off with the Aarti Industries. Clearly, if you see in terms of the counter, it has missed street estimates. And in addition to that, the FY24 guidance that the company has come out with, that's something which has disappointed the street as well, and the stock is trading under pressure. What would you recommend an investor to do with Aarti Industries?
I think if you look at wherever there has been a miss in the earnings, we have seen that the street has been hammering. And I think if you look at especially Aarti Industries post as numbers, I think these numbers were below estimates what the street was estimating. And I think the stock has obviously been punished. And obviously, as you rightly mentioned, that guidance also have been negative for Aarti Industries. So I feel that if I have someone, I think if somebody is holding the stock, I think one should exit. I think you'll have a better options other than Aarti Industries if you want to invest into this chemical space and to it. And I think we have seen that I think this sector has been under pressure since quite some time. So if you look at it, last 1 year we have been seeing this all this sector have been under pressure. So I feel that one should exit at this levels in Aarti Industries.
Right. Moving on, you have a Godrej Agro also, which reported numbers. The stock is trading under pressure in today's session, and it's a good amount of dip that's coming in terms of profitability. I think 83% drop there. And if you see the performance on the YTD basis as well, the stock is down around 11%, and in the last 1 year, around 16 to 17%. So no major performance, from a stock price indication. What would you make of a Godrej Agrovet, and do you see any green shoots?
I think the stock has been underperformer since last quite some time, and I think I don't see that near term anything upside in us. We've been seeing in India, so Godrej Agrowet. Secondly, I think unseasonal rains also I think has impacted the stock, and I think if you look at similar industries, like if you look at UPL or any other companies to compare with it, so I think those numbers were also, I think, slightly below estimates. So my view is that I think Godrej Agrovet also, I think near term, I think there's nothing to be made. I think if you have 2 3 year view horizon, then I think one should build it up and keep in a portfolio as an allocation. But near term, I think it looks difficult for Godrej Agrovet as well.
Right. So that's with regards to Godrej Agrovet. Now, moving on, in terms of a Nazara Technologies, the stock has been trading under pressure. Clearly, if you see the margins are in line, but the PAT differential has been driven by a higher minority interest. What do you make of a Nazara Technologies?
I think if you look at it, all this online companies, if you look at it in near terms, I think they have been under pressure. So if we start from say Nika or maybe Zomato or maybe so on and on, the list goes on and on. I think few companies from the lower levels have moved up on back of the better performance, like what we saw in Paytm, the numbers were good, and I think we saw some re-rating coming back into the stock. So similarly, I think Nazara, if you look at it, I think the stock was valuation wise was very expensive, and I think we've seen from the peak, I think the entire sector has been underperformer. And secondly, I think whenever the Nasdaq underperforms or is in pressure, I think we've seen that in Indian IT companies as well as the online companies like this remain a little bit under pressure. So coming back to stock also, I think numbers were a little bit below estimates, and I think uh, I don't think so that near term there's going to be anything re-rating which is going to happen. I think if you have a very very long horizon of 4 5 years, then I think one should look at it. Near term, I don't see anything which is happening in this company.
Right. Moving on, you have a Siemens also that is in focus. What's your view with regards to Siemens in trade? Because clearly, if you see in terms of the stock price performance, in today's day of trade, you are seeing some up move of around 2.5-3% coming in there. And on a YTD basis, the stock has given returns of almost 32 to 33%. How would you view a Siemens?
If you look at Siemens, I think the entire capital goods industry as a whole has done quite well. If you look at them post budget, I think. So I think this entire industry looks has been re-rated after a very long time, and I think we are seeing that capex coming drive by a lot of corporates and industries. If you look at different industries, I think which is driving the main entire capital goods industry as a whole. So Siemens as a whole, I think also looks very interesting number. Way the stock has done fantastically well. Valuations are a little bit expensive, but I think this they are always expensive in this sector. So I feel that Siemens one should still add to a portfolio. I think looks like another 10-15% move from here is warranted in Siemens as well from this current levels.
Right. Another thing I want to ask you about Siemens is this Fairfax India is going to acquire additional interest in Bangalore International Airport, and that is from Siemens Project Ventures, which is a part of Siemens Financial Services. Does this have any impact on Siemens?
I think that's only the news flow which keeps on up moving. But I don't think so can any meaningful impact on the Siemens shares at this point of time because of this deal.
Right. Moving on, you have a IRB Infra as well, which reported the toll revenue collections. What's your view on an IRB Infra? The stock is up in trade today, and overall infrastructure as a space has been in focus as well.
I think if you look at post budget, I think post what we've seen in the budget about 10 lakh crore allocation for and spend on the infra. After a long time, we've seen this infra spending coming back into by the FinMin. So I think if we look at it 5 years back, the spend on infra and the allocation now on infra, and this infra allocation is going to get increased a year on year, which is it looks like. So I think very few stocks on a listed space have been catching up in it. So IRB is one of them, and I think that's why the stock has been re-rated, and we've seen a good momentum coming back into IRB as well. And secondly, as you rightly pointed out, I think way the spend and way the collection of the toll collection has been, and the traffic which is moving up. So I think that is also an additional benefit for IRB. So I think there could be a positive momentum to be rallied in the Aarti industry, and IRB infra.
Right. And staying with a similar space, if you look at the cement companies as well, the year so far has been pretty much mixed, right, for the cement stocks. And if you see in terms of the earnings as well, ACC, Ambuja, Ultratech, a mixed bag, a decent rise in volumes is what we've seen. And the cost pressures have been easing as well. How would you advise an investor to play the cement pack, and what would your recommendations be?
I think obviously the leader. I've been very bullish on Ultratech Cement. If you look at it, this quarter numbers what they posted has been quite strong. 99% utilization. What we've seen in the company, the EBITDA has been very strong for this quarter, and way the fuel prices which have fallen in last 1 month. And what the management is guidance that I think the same thing will get impacted in the first quarter of FY24. So I think the next quarter results I think should be very interesting, and we should see the margin expansion coming into the cement companies. The prices for the cements are quite stable, and I think they have not reduced the price in spite of the fuel cost going down. So my sense is I think good utilization, spend on infra story which I earlier mentioned. Thirdly, I think if you look at it, most of the real estate companies which reported their quarterly updates and the earnings, they have been quite strong, and I think which is obviously a basics for the cement. So I think the cement yeah, capacity utilization should be under focus, and I think should be good. And I feel that in terms of valuations, if I look at it, I think the last 10-year average for Ultratech should be, I think, 15 and a half EV to EBITDA. And same, I think, has been trading at this juncture. So I think risk versus reward is quite favorable. And secondly, I think the kind of, if you look at the debt reduction by the management, has also been quite strong. So I feel that Ultratech remains the top bet among the entire sector vis-a-vis ACC, Ambuja or so.
Right. Now, moving on to the auto space, you have a Tata Motors, which is doing a fabulous job for the investors as well. Clearly, after JLR has planned to invest around almost 18 to 19 billion dollars in the EV push, since then we are seeing that good rally coming in there. And if you see in terms of the stock price as well, clearly it has hit a 52-week high. How far can it rally from here on, taking the valuations into consideration? And do you think, what should the target be from here on?
I think two, three things for Tata Motors. One is obviously after a long time, the stock has started performing and it has been a pause for quite a long time. This is obviously after the, if we see from the month on month, the numbers which Tata Motors reported from Jan onwards, I think the numbers have been quite strong month on month. Secondly, I think the chip shortages which were there earlier, which because of the ease of, I think we've seen that things coming back into the pictures. Thirdly, I think the launch of their EVs in India, I think has been quite strong, and I think the number of models which they've been launching in the next couple of years also has been quite strong. So I think product pipeline is quite strong. Commercial vehicle, I think, which was as good as very slow, I think, which has started reviving. So if we look at it, and in terms of passenger vehicles in India, the thing momentums have been quite strong. If you look at commercial vehicle, which they've been again backed strongly. Thirdly, I think uh, global GLR numbers have been pretty strong. These three all augur very well for it. Fourthly, I think we've been discussing about the Tata Technologies IPO after a long time, which should debut on the street, which what the market senses, I think. So I think that also the valuations of that, what they've been holding, I think should be, I think, around for 35 to 45 rupees in that band in terms of what the price band the IPO comes. I think that will also will be an added value for the Tata Motors. So I think there could be another 10% upside more from it. The stock has already rallied from here, so I think there could be a 10% more upside from here. I think that they will be reporting numbers also, I think, on Friday. So I think it should be more important to watch closely on what the management guidance is.
Right, so that's going to be an interesting stock to watch out for as well from here on, from an investment perspective as well. Thank you, Rahul, so much for joining us on the show and giving us
My
those
pleasure.
views. A lot of companies that we've discussed and good information coming in there. Stay safe and speak to you soon again.
Sure. Thank you.